Kirk the House Geek here with Mastermind the Market, your real estate stats update for the Twin Cities area. Well, are we seeing peak market and peak interest rates at the same time? We'll get into that in just a second, but first, make sure you click on that like and subscribe button. Well, yeah, kind of that's what we're seeing here. Let's dive into the data and take a look at what's going on in our market. Okay, so first off, looking at the new listings into the marketplace, we see that dropping off, and that was kind of that week where we actually got some snow there. And so we saw new listings where they were up a few weeks ago, up 28% over the previous year, end up only up 8.8% to 1170. We saw pending sales drop off a little bit that week as well, going from 945 down to 939. And inventory still holding up over last year by a fair amount. We can see now it's 4 weeks running. We're 14.5% ahead, 13.6, 13.9, 13.3. And that has kept things a little bit slower out there, but not like abnormally slow. We'll get into that in just a second. Okay, looking at the velocity in the marketplace, showings per listing drops off over Easter, coming into Easter week, I should say, 5.53 down to 4.61. So this is the average number of showings that are taking place on a listing priced between $250 and $500K in the Twin Cities area. So yeah, that drops off. Not a big surprise there. Last year, significantly higher. Well, because Easter was a little bit later. So they didn't line up there. So that's that big velocity change. But you can see we've actually been slower overall in velocity out there, and that's because of that higher inventory, just less showings per listing taking place. However, there is more buyers out there. The buyer activity is stronger. We can see quite a bit more showings over last year. So up by 12, up by 18, up by 18, up by 16. Now here it drops off a bit, only up by 0.5%, and then coming into Easter week, coming into Easter weekend here, down 24%. Not a big surprise there, but I'd fully expect that to rebound. Then looking at days on market, we were working our way down here, going back just a few weeks, up at 35 days on market. 2 weeks ago, 24 days average. It does jump back up to 28.1. Moving along in other news, talking about interest rates a little bit. Yeah, so we're looking at the bond market here. And as you can see, we are on the rise. And typically when bonds are on the rise, interest rates are on the rise as well. And a lot of that has to do with the inflation numbers that have come out. So yeah, looking at interest rates, you can see moving back above 7%. Now, overall, the Fed has said they're not going to raise interest rates. At least that's been the conversation that has been going on. So this is really about inflation numbers and job reports. If we can kind of just meet the expectations, we actually should see rates drop. And we'll talk about that effect here in a second. So because of interest rates moving higher, we have seen mortgage application rates falling the last couple weeks. Now, overall, we are watching that market moving up as we are into the spring market. So we can see prices on the rise again here. So this is putting our market meter at a 7.46. It's really hard to say quite at this point, have we peaked out? A couple weeks ago, the trend was looking like it might, but then the market meter jumped back up a little bit. So it's not abnormal that we kind of go up and down a little bit at this time of year, very weather dependent. And then again, you have Easter week here, which slows the market back down. So rates are a big player in this, and that will ultimately kind of determine which direction our market goes and for how long. But at the moment, where do we stand? Well, we're in a much more normal year. we are much more like 2019 as far as the pace of the market out there. For buyers, this is the most opportunity, the most inventory you've seen in a spring market in about 4 years. So there is more opportunity out there, and that will continue. For sellers, expect that time on market to be just a little bit longer than we've seen in the last few years. But again, this is not an abnormal amount of time. When you're talking 24 days average market time, and then you bake in there your inspection period, that's not crazy out there. Now, if we see rates go down, we may see an influx in buyers. The projection is for first-time home buyers, we could see a 40% increase if we see rates go down into the low sixes, and that's where the current forecasts show. If this happens during the summer or fall market time, we might see a hotter than normal, especially for an election year out there. So we may have a decent summer market and possibly fall market for sellers, while at the same time, having better inventory, at least for a little while, for buyers. As always, if you have any questions, please feel free to reach out. Hopefully you find this information helpful. Click on that like and subscribe again. Take care. Have a great week.